Good morning. Good morning. Welcome to our Microfutures live education for Wednesday, the 26th, as we barrel into month end, which is tomorrow. How's everybody doing? Hey, Jam, how's the fast? Oh, I saw your message here. Good, good, good. There you go. Right? Not eating is a bit of a pain, but remember what they said in the 80s on Magnum PI: beauty knows no pain. All right. Hey, Dan, how are you? Kevin, what's going on? How you doing? Okay. So things have kind of slowed down going into month end. Okay. If just kind of take, I'm looking at this is an old chart. It's got old levels on it, but they've been working quite nicely with the new contract. So looking at this market, that's the inventory in the short term, right? Over the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we've got 10 trading sessions underneath 57.80. Now price is above 57.80 and we're in distribution going into the end of the month. Now the other thing that we've got going that we can't forget is this gap. Okay? We have a gap. That is a short position. Because the people who are short under 57.80 are helping hold the market up going into the end of the month. That allows people who are long to distribute their inventory at a profit. That's how markets work. Okay. See, in a regular market, you don't have people shorting it, which helps put price up. That's the only thing that's different than a regular market. Like you go to the market to buy cheese, right? They're holding it because they're covering. Now, what do you do when you're a short seller, right? You're short. You sell something that you don't own, right? And when you buy it back, there's no position. When you open the trade, you are minus 1 or 100 or 10 or 100. When you cover your short position, that goes to Zippo. Texted you a long message on Twitter. You saw that. I don't think I did, sir. Which Mihai is this? Is this the Mihai from my coaching? I'm sorry, I didn't get your Twitter message 30 minutes ago. Hmm. I'll check. I looked at message requests and I didn't get anything. Anyway, we'll sort this out after the stream. Um, type your Twitter and I'll look for it. How about that? Hey, Singh, how you doing? So let's get back to this. I apologize. So we've got a short position. They are bid to cover, right? Going into the end of the month, which is when you have to pay your tab as a trader, right? So what we're doing is we're trying to figure out how to trade this now. What have you noticed over the last 3 trading sessions, 4 trading sessions? Anyone? Ranges are smaller. Make sense? See that? The ranges are smaller because we are in distribution, right? We're in distribution. And really, nobody wants to buy this in size before the last day of the month, the last 2 days of the month, right? Any sort of sophisticated trader will look at this and go, ugh, I really don't want to buy this because it's held up by a short position, right? Now, if you take the market sideways long enough, it will attract buying. People will have to buy it because it's not going any lower. They have to buy it. So the question you have to ask yourself, of course, the concept is the same, whether you're using candle wax or TPO or itchy and scratchy or bunko or whatever those things that you guys use. The concept never changes. The chart system is just a different way of charting out the accumulation and distribution. Make sense? Okay. So how do we trade this going into the end of the month? What do we manage our expectations? Are we looking for this or this? As retail traders, we should just trade back and forth. And if we take out, I'd say 58.43, there's change. And if we take out 57.80, there's change. Hey, Moran, how you doing? Do you guys get that? This way you can manage your expectations, right? So we draw a box like this, and until you break out of that box, just trade it back and forth. Okay? Good, good, good. Right? If you have questions, please ask. But that's what we're looking for. How do you do that? Luckily, we have our handy dandy candle wax chart. Here are our levels for the morning. Balance was 58.15 half to 21 half, right? Where is good old VWAP? VWAP is here at 24. I want you to take a look at, if you folks could see, do you see the big chunks of volume? Let me just get rid of VWAP for a second, okay? Let me just mark it. Whoa, come here. Oh, come on. Give me a break. Okay. Let me just get rid of VWAP. Do you see the big chunks of volume? And we talked about this. You see this? And you see this? So we've taken this volume and we're distributing it up here. If we stay over 28, you see how there's a seller here? That's seller from there. That's this volume here. Right? So this is the accumulation and distribution of inventory. That's why I have, you see, the market sells off, the inventory starts to accumulate under 58.21. We go sell it, then we come back down and we distribute at 58.25. We come back into that 58.18 to 21 range, right? And it goes sideways. Now you'll see that inventory build out again. And then we're back into distribution. It's the same thing over and over and over again. Nothing ever changes, right? It's the same thing. Hey, Zazu, what's going on? How did I screw this up? Hang on. There we go. It's going to be slower, which is to be expected going into the end of the month, which is good, right? All the drama's over now, right? Options expiration, contract expiration, Fed stuff, right? So what do the large traders want to do? They just want to drift into the end of the quarter, right? Nobody wants to blow up their quarter. You guys get that? So if you've made money over the last 3 months, the last thing you want to do is lose it all, right? If you've made money this week already, start socking that money away. Now, I spoke to someone yesterday and he made a very critical mistake. He was up a good amount of money in his account and he left the money in his account. And he ended up trading away all the money that he'd made. And I asked him, I said, I told you, never always get money out of your account on a Friday, right? So if you're trading with 2 grand and you make $1,000 that week, get it the hell out of your account. Don't leave it sit there and let your ego lose it, right? Your ego and your lack of skill will end up chewing through that money because you've been sold this false bill of goods that you should grow your account and trade bigger when you don't have the skill required to do it. You have to have some sort of discipline, right? You can't just let the money stay in your account. You might like looking at it because it's a symbol of your success. Here's what you do. Wire it out of your account, leave enough money in there to trade, right? And then hand it over to your girlfriend or your wife. And you ain't getting it back. Right? Girlfriends and wives are the best credit and compliance officer. Okay? You have to keep the money you've made. Otherwise, there is no sense doing this. Okay? You have to keep the money you've made. Otherwise, what is the point? Right? Don't be lazy financially. Right? That money is not secure in your brokerage account. It is at the discretion and the whim of your ego. And your ego is going to lose it every single time. You know, it's the worst thing. And that's a good amount of dough to lose. You know, and a lot of hard work to get there. And people will say, okay, you're allowed to do that once. Don't ever do that even once, because it then becomes a habit. That it becomes a habit. You have to have good business habits, right? Don't leave money lying around. And I'm sorry, a lot of people are going to disagree with me. I like my friends to keep their money. Is there such a bad thing? Is that such a bad thing? Like, I don't wish for everybody to be broke, right? You have to have some common sense, right? You are not going to be Paul Tudor Jones in 6 months, right? You are not going to be Stephen Cohen after 6 weeks. So the money you make, take it. Take it and get it out of your hands. So you can't. And this whole thing about house money, that's how houses get your money. It's house money and it stays house money because it don't come to your house, right? That is like taking your paycheck and burning it. Okay? You have to withdraw money from your accounts. Warren Buffett, and we are not Warren Buffett, so you can't leave 20 grand sitting around and have it it just disappeared. And I bet you Warren Buffett knows where every nickel of that money he has is, right? Because old guys and old people, they know where every nickel is, right? The guy stands in line at McDonald's, right? You have to be cheap. What are we doing right now? Our overnight point of control is here at 58.25. When I hear about these things, I will bring them to your attention, right? My job is to keep you people, all my friends, to keep them from making just unnecessary mistakes. Short selling? Yes. So let's say you're thinking short. Now, overnight inventory is short. I forgot to tell you that. Hang on a second. Let's go into we've got some time, right? So let me get off my soapbox here. Stop preaching. Oh, we got 12 minutes. So overnight inventory, my friends, is short. What does that mean? That means the trading is underneath the previous day's close. Overnight inventory is not flat, it's short. Matt, if you're looking at my screen, do you see my screen? Do you see the blue crap? The blue crap is under the close. Very simple. If the blue crap was above the close, inventory is long. If the blue crap is mixed, then it's flat, right? The value is the blue crap, right? So the time and the trading volume is under there. So we're looking for this, right? We're looking for this. Okay, so any change is taking out that high or that low on a short-term basis. We are looking for a move higher to correct overnight inventory. It's already kind of happened, and we see that there are definitely sellers at 31.5. You don't agree with my methodology, but you agree with what I'm saying. Okay, well, that's cool. All right. I'm just saying, don't throw money away. right? And I'm sure any business person with a sound mind is going to agree with me. All right? That's all I'm trying to say, right? And I don't believe that people who don't know what they're doing should be trying to grow their account. I have never seen it work for a rookie, right? You spend time doing this, take the money that you earn and sock it away because you're going to need it one day when you don't make any money, right? I'm talking about 33 years here and I've seen it all. So, talking about shorting, right? When you see the market offering underneath a level, right? So, say you were thinking, oh, you know what? I see a seller here. I'm going to short some here at 58.30. And as the market comes in, I see the offer moving lower and lower and lower. So when you see a seller, right? When you see sellers competing, that means this red line, the offer is moving lower. That means the product is getting marked down and you can stay short. Is that what you were talking about? And as we come into this position here, the selling kind of slows down. You notice? Right? Because this is the position that we sold here. And when we come back down to this cost basis, the traders stop selling. So when that happens, the short sellers will come in and start covering. If enough short sellers come in and cover, the traders who are long here will lift the offer back up. If those traders don't come in and cover, then these traders will sell the market down to where they find buying. Okay? Make sense? Trades off the open. What are we looking for off the open? So we're going to open in the range of the previous trading session, pretty much at the top of its cost basis. So we can use our 1 minute candle chart. So for example, had you short 29, 28, and the market doesn't take out VWAP, what should you do? There you are. What's up, Aubrey? How you doing? Exactly. Now we're starting to, let's see if we can offer under VWAP. If we get under VWAP and stay under it, your first target is 22. That's where this stop is right here. See, we're offered underneath VWAP. We're offered under 24 and 3/4. As long as the offer keeps moving lower, you can stay short. Once that offer starts moving back up, that means the sellers don't have to lower price. See how we slowed down right at that stop at 22? Right? The stops are where the shorts are waiting to buy. Right? They're all sitting here. The buy orders are here. So you notice that this low cannot get down to the stop. They're front running that level. That means they're jumping the line to buy because there's not enough supply. Right? When they see supply, they'll drop their buy orders and it'll break that stop and come down into this area here. We're looking for 21 and a half if we break that 22 stop. Okay. See how we broke it? So the short sellers who are bid to cover here, they see that some size is coming in on the sell side. They drop their buy orders. It takes that stop. Now, what you do is when a market takes a stop, is you wait to see, does that bring in buying or does that bring in more selling? Because sometimes when you break that stop, a whole bunch of buyers come rushing in and the offer will start to lift. Twenty-one and a half worked kind of nice, huh? Now, I wouldn't go long off that right away. I like it when it does a look below and fail. But what's nice about that is if you were short 28, 27, you could do some covering here in the 22s. That's how you can make use of these levels. If you stay under 21 and a half, you're looking for 18 and a half. So overnight inventory is short. It already had its correction and they sold into it at 32. Good to know. Good to know. Hey, Eric, what's up? Hey, McChow, welcome. We have we have equity rooms where we have a lot of folks who trade stock. Sometimes they have live streams in them, but I live stream twice a day. And what do I look at market profile? I look at where's the inventory. Okay. I look at where's the inventory. I look, are there any single prints? And poor lows, poor highs. How long do you expect that gap to be? I have no idea when that gap's going to fill. That's the beautiful part. I have no clue. It will fill when we run out of buying. Then they'll sell the market down to the gap. That's where the buyers are sitting. I tried to buy 22 and a half and I missed it. Rats. Hey JR, how you doing? I think after month end, we have a better chance of filling the gap. A poor low is when you have two ticks, less than two ticks of excess. Right? And we're off. If you're long, sell into the strength. A little bit of buying on the open. Nice to see. Because that's where the sellers are. Remember that gangster? They asked him, "Why do you rob banks?" He goes, "That's where the money is." Shorts wait at the stop because that's where the selling is, so they can cover. See what I mean? Does that make sense? So a poor low just means that there's buying competition. It doesn't allow the market to leave any excess. A poor high is the same thing. It's except selling competition. It doesn't allow the market to leave what they call an excess high. We're finding bids at VWAP, which is that 24.25 level, and we're getting some rotation up to 28 and a quarter. Let's see if we can get up to 28 and a quarter. Exactly, Jiraj. The longer the time frame of the candle, the more people will be parked at that stop. That's that's the theory. So now we've got inventory at 25, 26. Let's go sell it at 28, 28 quarter, right? There's going to be some sellers between 28 and 30. Let's see where they step in. There they are, 28 and a half. Remember, inventory is short, so this move up is a correction to inventory, right? This is old business being taken care of first. Then new business will be the on the next on the agenda, right? I've been noticing, I've been teaching this week. You can tell people are tired. This month tired out people. Staying under the close, we're targeting that stop. Now watch, Jiraj, as we get down there. Watch what happens. As we get to this level, will the market just slow down and bounce? Will it slow down and then crack it slowly and then bounce? Or will it just rip right through it? I've never been an equity options trader. So that I can't answer. The transition to futures. We have a lot of folks who trade both. Um, and I invite you to join the room for 7 days for free and get some info from them. See how we took the stop, caught some buying, right? That is behavior that you will notice if you pay attention. So the natural thing is people to follow price and get short underneath that stop. When they realize that they're hooped, right? They go and race to cover, and the seller will pull the offer. Yeah, I've never traded options. I know a lot of people have. It's very popular. Yeah, and Andy's right, right? We opened in yesterday's cost basis, which means it's business as usual from yesterday. There's no change, right? If you open outside the previous day's range, up or down, oh, something's changed, right? That affects price, right? If you open inside the previous day's range and value, there's no change, right? It's the same business as yesterday. The best thing to do on these days is trade the look below and fail, the look above and fail. Find a nice zone, a nice rotation, and just trade it back and forth, right? Make your money, go enjoy your day. What would I expect if price does not correct up? What does that tell you? We're expecting correction up because inventory is short. If the price gets, like, say it gets here and someone's hammering it, well, then you know that there's a seller here. So if you don't get that correction up, that means someone's trying to get rid of their inventory, right? Ah, that's a great, Matt, that's really good. If trading the open gives you anxiety, don't. You don't have to trade the open. It's a huge misconception. And that was created by those trading rooms. You see, when trading rooms first started out, retail trading rooms, they were set up, and I happen to know this because I knew the guys who did it 20 years ago and earlier. They were set up by stock promoters, and they'd get retail traders in and they'd get them all hyped up and say, okay, we're going to run and buy this stock. And they'd get all the retail traders in that room to run and buy the stock, right? And they would just sell into it from the other side. I was like, right? Right? So they have this thing where you have to get all hyped up and drink your Red Bull and electrocute yourself, right? And just jump in there, right? That's how you lose money. It's okay to sit down and watch the market open so you can get a sense of what's going on. It's nothing. I mean, for a number of years, I would not trade until the first 2 half-hour TPOs had had traded out. How did I know this was happening? Because I'm the guy dumping millions of shares into the buying from Canada, right? 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 The the owner of the room is the same person who owns the stock that they're selling you. It's completely bad. And because they don't disclose that, it's not legal. Then trading rooms evolved into what we try and do is build a community of people who help each other earn a living. Took the W high. You see how they sold into it, Jiraj? You see how we took that high, that stop, and they sold into it. Slowly creeping up. Now, if we take out the close, Your target, your target will be this stop here. And that's at 34 and a half, and then the overnight high at 36 and a half. Okay. Remember, once the position is underneath you, you will take that position and sell it up here for cash, right? So there's 20, we just said, there it is. If we take out that 20, 34 and a half and accept above 35, look for the overnight high to transact. That would be your target. When we get to that overnight high, right, that's when the previous day high is right there as well. So say I was long some size here, I would be selling into this like you wouldn't believe, right? I'm not going to bank on the fact that we're going to take that previous day high. If I had size, I'll be selling it here. Let's see what the order flow is like. And this is the kind of price action that really traps a lot of people short because it's slow and creepy. I have no idea what they want, EAS. All I know is if I was long inventory under 29, I'd be selling it at 34 for sure. And notice how we stopped at the stop pretty much to the tick, right? So let's see what happens, right? If you hold a market steady long enough, it'll attract buying. Scalp mode is beautiful. Then you don't really care. Okay, when Dalton talks about weaker money, he should actually just call it there's trading money and investment money. And a futures market is mostly all trading money. It's speculation. So what that means is they're not buying it. Yeah, they're not buying it to hold it for 20 years. Right? They're in and out, right? That's why a lot of the times the selling doesn't last and the buying doesn't last. Because all we're doing is moving inventory up and down and up and down. The markets keep going higher because there's a limited amount of supply in the underlying stocks. Speculation and short-term hedging. Hey, Joe. See, now Joe is a consummate professional. He's all relaxed at the end of the quarter, right? Nice and relaxed. Well, you might want it higher ES, but do you have the order flow to do it? You always have to remember that, right? You always say people say they want this, they want that, but does the order flow match? Do you have the customers to do it? That's really all it is, right? That's why I never try and figure out what's going to happen. I say if it gets above this level, this is your target, right? If it can't hold that level, it'll rotate down to the level underneath, right? That way, it just makes my life easier. Now we're just walking around through this 58.25. Hey, listen, I'm, I'm not arguing with you, ES. I'm sure everybody wants the market up at the end of the quarter, right? Nobody wants to have a bad quarter. Do I ever use the tape to help with entries or exits? No. The 1 minute candle chart is your tape, right? It's just nicer on the eyes, right? Sometimes I'll look at the tape, you know what for? Nostalgia. But really, the only reason I look at the tape is this watch, to tell me the speed of the market. It's like a speedometer. And in the old days, we used to trade off this, right? So say I want to go long over 30 and that offer is not getting over 30. Well, then I know not to go long. But no, I just use the chart. I'm a simple guy. I like to look at one thing when I'm executing. I don't even look at the TPO when I'm executing. I just keep my eyes focused on the 1 minute candle. The less I have to look at, the better. Right? If I can make my money in 3 or 4 minutes and be gone, that's all I want. Right? I want to get in, I want to get out, I want to get my money, and I want to disappear. I don't want the drama. You know, I use I use the last previous. This is the overnight ETH, and this is the regular trading. Just so I know where the inventory is. Everything else is conducted on the candle. Damn, I missed that 28 and a quarter short, 28 short. Oh well. Okay, let's see now. So that was our correction to overnight inventory. Not great. We couldn't take out the overnight high. We couldn't take out the previous day high. That's what I said. The order flow does not support higher at this time, right? At this time. Doesn't mean in an hour from now it'll do this. I have no idea, but I'm not a genie, right? So I got to trade what I see, not what I want to see, right? Now, everybody who's looking for a break of that overnight low, what I want you to make sure is, right, if we can't break the overnight low, don't stubbornly short it. What I want you to do is I want to look for a rotation, right? So maybe we get a 2130 rotation where it does look below and fails of 21 and look above and fails of 30, right? And you can just trade the edges of this box. Exactly. I like rotational trades because it's a very simple business. You understand the business, right? So there's no look below yet. It's the fail to take out 21 and a half. My thing is I always buy it and get stopped out, then the trade works. So I'm just going to hang on a second and see if we can get it down here at 21 and a half, 21 and three quarters. Does it hold 21 and a half? Okay, now it's going to try and look below. There it's looking below, right? Is it failing? Not just yet. We want it to come back up. We want it to come back up over that level, right? There's no use going long right now. Wait till it comes back up. right? And when it comes back up, wait, there's 10 seconds till the next candle, right? It's slow enough that we'll be able to catch it. There's a seller at 25. Thank you. Nicely done, TJ. Right? And the seller dropped down to 24. See? No reason to go long. Right? So when you wait for the fail, right? When you wait for that fail, you don't get stopped out and then it goes in that direction if it does. We got to wait for the fail, right? The seller's still coming in. There's no reason to get involved with it on the long side. Hopefully that saves you some money. So if the rotation breaks, you double it to the downside. That's all this is. It's the same thing every day. So now we're in the discount zone. See, oh look, you did a little look below and fail of 18.5. Say you went long 19. You know there's going to be a seller at 21.5. And then you know that the sellers are going to come in right there, right? So see, it just looked above, but it didn't, see, it hasn't entered 22 yet, right? It's looking below. It hasn't failed yet. See, the seller's still there. No use going long yet. This is how you can manage your expectations and manage your trading so you're not always getting stopped out, right? And they tell you to be patient, but people hate being patient. So how about I tell you just to be smart, right? Let the seller wear themselves out, right? Let the sellers wear themselves out if you're looking for a long, right? Let the sellers find those buyers. See, they found some buyers and they're raising price, right? But the order flow has to support follow through. Right? We all have biases, and that's okay, right? But just make sure you don't stick stubbornly to a bias when the chart is telling you you're wrong, right? Overnight low is at 58.13 and 3/4. Because I am not short, I was looking for a long. I'm not prepared to short, so I stay out instead of just trying to jump in short. Okay. When you're more on the ball and you notice that the long isn't working, you can flip short, but don't just do it arbitrarily. I'm scalp long 14 and a half, selling them here at 16 and a half and a quarter. Nice work, Longated. Nice work. Yeah, I wasn't really on the ball to hit it on the short side. I was a little long biased, but then I saw that my long was, man, that ain't going to work. So I just cool my jets and wait for my trade. Right? A lot of people were like, yeah, I saw it and then I shorted it and then I did. Just if you're moving kind of slow like I am today, it's okay to admit you're being slow or you're a little sloppy or you're not 100%, right? You'll save yourself some money. Right? You don't have to prove anything to anybody, right? Just relax, chill out, right? And as Dalton says, let the trade come to you, right? It should be like, you guys ever watch curling? I'm Canadian, right? You know how they just like release the curling rock and it just glides over the ice, right? That's what you want your trading to be like, nice and smooth, right? Nice, well traded, well done. What you want to look for is the market to to come and show you, hey, you know the kind of business that you do? We're going to do it now. So you can put the trade on, put your insurance policy in place, right? And go to work. If we accept under the overnight low, the target is the previous day low. It's a little back and forth here. I wouldn't be surprised if we go and test that 5809 and a half. Now we're in the 2 times discount zone. So if that accepts underneath 12 and a half, you just stack 4 of these underneath each other. And this is the 4 times discount zone from your cost basis. There it is. There it is. If we stay under 9.5, look for 6.5. Right? Remember, month end is tomorrow, not today. And today just started. So there's lots of time to shake everybody out of this thing. Hey, Jeff. Thank you, Andy. So if you're short, we just came to the middle of the 4 times discount zone, right? Found some buyers there. If we get accepted over the previous day low, right? Be careful, right? There should be a seller somewhere in here, maybe at 12, 12 and a half. Creeping back over that previous day low. Let's see if we stay there, right? We're going to get a new period in a couple of seconds here. There we go. Looking for a seller at 12. They might front run it. There it is. Right? See how we didn't even get to 12? Did you guys see that? They stepped in before 12. So the market is now liquidating, right? So it takes time to get all these poor souls who are trapped. We need to take this and flush it down here, right? So we need to go sideways for a little bit. That's what this back and forth is right here. That's what I'm talking about, that back and forth. This Epic pen is like, seriously, like possessed. Let's see if that seller can be taken out, right? Taken out means that they see buyers and they decide to sell at higher prices. See how the seller's there at 12? Like a bad cold. When the market can offer above 12, then we'll have something to talk about. Till then, it's going to go back and forth like a vacuum cleaner and try and vacuum up those contracts here. There we go. Oh, point of control moved down. Good absorption. Now let's see if we can take out that 12. Have we cleaned out that 12 seller? Oh, there's a 12 print. Oh, there we go. There you go. I guess they saw buyers. Oh, lovely. Yeah, exactly. Trading Corey. Not on purpose, but because of the business that had transpired, that was the natural result. Why was I looking at sellers at 58.12? Because I was front running my level by 2 ticks. And I saw, if you're looking at my screen, you can see that there's definitely a seller at 58.12. Right? They saw buyers, so they raised price. Now they're back. That's why you've got to sell into strength. The top of the candle is where the sellers initiate. See? This is where the sellers are initiating. They don't teach you that in candle school. They should. Right? They leave out a lot of vital info. The top of the candle is where the sellers compete and initiate. That's why price goes down. And if you don't believe me, that's okay. All you got to do is look at a 1 minute chart and focus on it. It's not a concept that's talked about. So I understand why you don't get it. It's funny. I was teaching some new people this week, and they were all like, I'd say something, and they would be like, eh, and I started asking them, why you guys all sound like I'm telling you that your cat died or your dog died? What's going on with you guys? Right? I tell you something, this is the way something's working. You go, So what are you constipated? What's going on with you guys? Well, it can't be that simple, right? Well, hopefully, using my methods, it won't take you a few years. I want to try and cut down that pain time. It's hard to sell simple, but I really don't care about sales. I really care about helping people. If I cared about money, I'd just run deals, just sell everybody stock. It's like a lot more money. All right, let's see where the sellers are now. Sellers are just right there at 13 and three quarters. See? See how we came to the top of that candle and stopped and moved down. So and why would they sell there? Well, because they sold there before. Wouldn't you sell there again? See, the reason is they have size. And when you have size, you will sell at those levels because you had buyers there before. I can go into details. So I figured, let's do this. We'll say, you know what? On the third full moon of every year, the market makers will release a dragon. And where the dragon goes to the bathroom marks the low of the market. And of course, we will sell you an indicator at $10,000 that tells you where the dragon is going to poop. That would probably sell better. There's no reason to overcomplicate this business, not unless you really want to confuse yourself and lose all your money. How do you find your setup? Your setup is based on business, right? So when you're long, what is the business of being long, Michael? It means that there's no supply. How do you evaluate your trades? Does the trade work? Did I make money off that business operation? Right? And if it didn't work, was I good at covering my risk? Right? I don't mind if you want to overcomplicate it. I'm trying to reach the people who want to keep it simple and make a living. Right? That's my target audience. That's what I want to try and help. I want to try regular people who've never worked in the business, right? Cut through all the BS and the double talk so they can actually start seeing some results. Everything else is just a bunch of cheap talk, right? And if you actually went into a business and said, I'm going to overcomplicate your business and your profits are going to go down, would you hire me as a business consultant? Say that stuff out loud and see how ridiculous it sounds, right? If you're short 12 and a half, you're looking good. You're looking good. It's offering lower, right? Watch it take that A hot low. Ooh, poor low. Little bit of momentary buying competition at 5.25. That's my pleasure, Gail. This is a tough business. So If you were short 12 and a half, I would have had some 6.5, 7 buy orders in, probably 7, 8. I always like to front run. Now, the question is, does this poor low, this double bottom, that shows that there's buying competition there, does that hold? Because if that holds, we will get acceptance over 9.5. Yeah, I figured dragons, Travis, because everybody likes dragons now. Like even my girlfriend watches all these dragon things, right? People love a good dragon. I don't know. It got fought, we should have the dragon indicator, right? I think it would sell. But mind you, my whole life is being how do I sell 150 million units of something, right? Dragons, it's a thing, right? I even see a stock symbol, DRGN, Dragon Holdings Limited. Somebody got a shell? Anybody out there's got a trading shell to do an RTO and go sell some stock? Getting above that previous day low. Let's see if we can hold it. See, that poor low is holding. And even I am in disbelief that it's holding. Hey, somebody see if DRGN is taken as a symbol. Oh, heck yeah. Dragon Holdings. Let's go sell some stock, right? Dragon VWAP. I'm telling you, we'll make a fortune. Wouldn't that be bad? I start teaching people how to retail trade, then I'll teach them how to be villains, and then end up creating a bunch of deal people and stock promoters. Oops. Right? I can't believe this low is holding. I really can't. Right? That means I'm short biased. I'm saying it out loud. So if I'm wrong, at least I'm aware that I'm wrong. That's what I'm thinking, Andy. If it holds long enough, we're going to trap some shorts, right? That those poor lows, they're like a lobster trap. You leave them down there long enough, they start to fill up with short sellers. A poor low is a market profile term where do you see that A low and that B low are at exactly the same place? You guys would call it a double bottom, right? What that means is when that when that B period came down here, all the buyers stepped in and started covering. So the sellers went, "Ooh, buyers, let's raise price," which is exactly what happened. Exactly, TJ. So now if we build a little position here between 58.08 and 14, if the order flow comes in, if we can drag enough customers into the store, we can kind of take it and sell it up here, right? Between, I don't know, I'd be happy for like getting back over the overnight low and selling it here. So we did a look below and fail of the previous day low. But you see, there's still a seller at 14. So we might rotate back down now. Watch. Nope. Let's see. There's 14. There they are. right? They're in the bushes, right? There they are. See, they're showing their hand right there. Now, if they see buyers, they'll lift up to 15. If they don't see enough buyers, they'll sell into this like they're doing right now. So if you know where the sellers are and say you were long, if you were long 10 and it gets up to 14, you know you're going to have competition and they're going to try and steal your client, your customer. So nail it. That's why everybody's selling. You have to turn your inventory into cash. Hmm. So what's next? Right? So there we've got that little rotation here. Let's see if it holds. You know from the candle. I don't look at Wix or Twix. That's a good candy bar. Sorry, I'm on day 4 of this fast. So um, the top of the candle, no matter what kind of candy bar it is, Wick, Twix, Wix, that's where the sellers initiate. Now, how do I know this? Because for 20 years I was the top of the candle. That's me selling. Takes one to know one. See? Now that's a simple thing to say, but it's going to kind of mess with your head a little bit. Oh, I'm just trying to fast for 5 days to drop some weight. That's all. The first couple of days, my brain was a little, but now not eating for 4 days, you get really like mentally clear. Way more energy. I have not been able to do that yet, Moran. I apologize. Let me move this up. Yes, just water. No, just coffee and water, Joe. Like sitting and trading is very unhealthy. That's why I have a stand-up desk. Yes, everybody says that. That's probably a good thing to do. Let's see if that poor low holds. Okay, here we go. Moment of truth. I am so short biased, and I don't even know why I'm short biased. Right? It's just like I just keep thinking there's a lot more inventory than there is. Let's see if it holds. Right? And what I'm talking about, folks, is this low right here. How's the coin of bitterness this morning? 86,821. Yeah, it's in balance again too. Now, if you look at Bitcoin on a 4-hour chart, holy cow, is it mechanical? Come on, come on. There we go. Oh, psych. Not yet. Boom, there it breaks. I'll use the same balance area and keep expanding it unless we get a big move to the upside or the downside. I like liquidation. We get better price action after the liquidation. Now, as you can see, it's becoming a bit of a pain because now we go from 4 to 8 times discount. Hopefully, we find a bid somewhere here. The cost basis, right? If you look at the early video we did, I showed you where the cost basis was and how it developed, and now we're underneath cost basis. So watching to see if 5,800 holds. Nice trade, Slippy D. 10 points a day keeps the doctor away, right? We haven't found the bid yet. The buyers who are short sellers, because that's really the only one who's buying after a gap, they see some selling. So they're very happy to try and get the price out as cheap as possible, right? As Phil said, let it go down. I want to cover cheaper, right? So let's see if those sellers now, right? Sellers were here, then they moved here, 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 top of the candle, remember? So as long as the sellers are initiating, right? As long as the sellers are moving their sell orders down to capture that buying, you're okay. See, if you're short here and we got up to 5,800 and the seller did not initiate, well, you got to cover. Because if you lose your seller, you've lost your backup. Does that make sense? Your seller is your backup. So if you're short 57.98, for example, right, or 99, right, put some buy orders underneath. Don't snooze on the cover. Don't fall asleep on the cover because as soon as the market finds the bid, it's going to rip your face off. We've seen that before, right? Especially when a Fed speaker is speaking. You guys understand what I'm saying? In this market, especially in the RTH, admit you're wrong quickly, right? Admit you're wrong fast. It's okay to be wrong. Just don't be wrong and stupid. I mean, don't be wrong and and you know and stubborn, right? Don't be wrong and stubborn, right? Wrong and stubborn is stupid because you lose a lot of money, right? So say I'm short 59.99. I'm out. I'm out. I'm out. I'm out. Goodbye. Thank you. When I see that, see how that big green candle comes and takes you out? You have to understand that this market going into the end of the month, there's going to be less unless we take out the low of I think it's the 24th and get into that gap, right? Don't be stubborn short, just like don't be stubborn long. We don't want you getting run over. Now, this is looking like a look below and fail of 5,800. So if you're long, right? If you're long, we're above that seller. The next seller is going to be up here at 6. Just remember that, right? So if you're long, like I bought 2 and I sold 3.5. But if I had bought some more contracts, I'd put my sell orders out. So the same thing on when you're going long. When you're long, as soon as you put your trade in, put your stop in. As soon as your trade gets executed, go put your sell orders out. So you can take advantage of these big candles, right? Don't wait for an invitation to sell. Okay? Because the other market participants sure as heck are not waiting for an invitation to sell. Okay? Right? There's a seller here. So if I was long 2.5, I'd put some out. Put them out. Right? That seller's here. They're showing themselves. Top of the candle. Doesn't matter if it's a wick, right? Or a scented candle, no matter what kind of candle it is. The top of it is where the sellers are initiating. So you can be damn sure that they're going to sell some there. If they see buyers, of course they'll lift, but you stand in there and get rid of your inventory before somebody takes your customer, right? Don't let them rob your customer, right? The thing is, in retail trading, sitting in front of a screen, we don't get that sense of urgency. You don't got somebody standing next to you or somebody on a phone next to you trying to scoop your customer, right? We don't have that. So there's no sense of urgency. People are like, it'll go higher. And then all of a sudden somebody comes and just smacks it, right? Sell into that strength. Make sure that you liquidate, right? Because as what is your trade? Say you do the look below and fail, right? Look below and fail. Say you buy 2. Stop is down here. Sell a little here. Sell a little here. Sell a little as the market goes up because you've acquired your inventory. Your insurance policy is in place. The second part of that trade is to liquidate that inventory for cash. That is the second part of the business strategy. One is to acquire the inventory, right? Second is to buy insurance on that inventory, right? Then you sell the inventory for a profit. That's what trading is. There's nothing else, right? And that's how you get in trouble going, oh, it's okay if it retraces, it'll go back up. How do you know? Are you a genie? Right? If there's obviously a seller, they see competition. So that's why they're lowering price. That should give you a heads up, right? If the sellers are lowering price and you're long, right? They're trying to. Psst, psst. So we're looking for the next seller at around just 6.25. There they are. Now, if they see buyers, they will lift and will come up to 8.25, 8.5. But see, look how they stepped in. It's happening before your eyes. I'm not making this up. I hope that helps you guys. Because if you know where the sellers are, you can manage your expectations. And say you were long at 2.5, you know that there's going to be a seller at 6. So you sell and you make make your money. Now, once you get used to holding trades longer, sure, you can hold your trade. But if I was long six contracts at two, 1.5 to 2, I'd be very happy to get out of them. At 4, 5, and 6. I'd be very happy. That is money that I would take every day. Short bias because lack of food. That's good. I'm hungry. Short everything. The best time to trade is when the market shows you that your business setup exists and that you have the skill to take it. That's the best time to trade. Welcome to the stream. The best time to trade, I like trading Globex because it's nice and slow, right? And you can chill out. You don't, and this is actually not bad trading too. It's a little choppy, right? It's not really smooth order flow, but it certainly is tradable. Just the top of the candle. It doesn't matter if it's a wick or whatever it is, right? It's the top of the candle. Whatever that is, that's where the seller is, right? The sellers are here at the top of the candle. What are my thoughts on WD GAN? I have no clue. I've heard good things, but I've never read it. The Wyckoff stuff I've read a little bit of, and it just sounds like exactly what I talk about, but written like 100 years ago. Um, I'll tell you what my favorite book on trading is, right? But it was written in 1873. William Worthington Fowler. And the book is called Inside Life on Wall Street. It's available on Google Books for free because it's published in 1873. It's the best book on the stock market you'll ever read. Now, Steve also always jokes around and goes, "Yeah, that's when JJ was walking around, right?" But it's a great book. It teaches you step by step what goes on in the market. It's really well written. And the cool thing is it goes into detail on how the greats did their deals, the Vanderbilts. Here, I'll put it in the chat. Long 6 to 14. We need to get it over the hump here. See how the sellers came in? They're here, they're here, they're here. Right, we need to crack that 7 3/4. There we go. There's your bid. Be onto something. There's your bid. You're still long. Now we got to get past that goalie at 58.07. Come on. Right. And if we start losing the fives and the fours, there we go. There we go. There's 7.5. Come on. Clean out those 7.5 seller orders. Come on. Your first target is that previous day low. There we go. We're starting to creep above. See? There's the creep. So right there at the top of that candle is where the next seller is going to be. And then top of this one. Doesn't matter if it's I don't know, what do you call it when there's no skinny thingy. Oh, you know what? I even forgot. I'm sorry, guys. I've just kept going on. I was supposed to shut it down 6 minutes ago. Thanks for telling me, Travis. I've just been babbling on. Sorry, folks. I'm happy that that works for you, Ichimoku. Right? Oops, sorry about that, folks. I kind of got wrapped up in, especially you get me talking about that book. I'll talk about that book for hours. Thanks, everyone. Come visit us at Microefutures. We've got that 7-day free trial that runs. Spend some time with us. We'll help you cut through all the red tape and the BS. And please, if though there are folks out there who are a little bit more serious, who have the time and stuff like that and want some one-on-one coaching, please reach out. Because my coaching program is a lifetime program. So once you're with me, I just basically haunt you until you're profitable. So thanks, everyone. I'll look for those DMs. For the folks who have left me DMs, can you type what your X name is or where you sent me the DM? Right? So I know where to look for it, because sometimes this X, I don't get the DM. So TJ, just DM me on X. It's a little pricey, but it's for life, and you only pay one fee, right? And you go in a rotating class. I repeat the class every 8 weeks. We have price action labs, and then we just work one-on-one whenever you want, right? So it's a very intensive with absolutely no time limits. If you need an hour a day, you got it, right? And I work when you do. So thanks, everyone. Have a wonderful morning. Be safe out there. Thank you. Bye for now.